welcome to the CLS Weekly Market Review. I'm your host, Robin Murray, here today with Manager of Investment Research, Paula Week. Hey, Paula.
Hi, Robin.
Hey. So I want to start out by some of the headlines that we're hearing about this week. Greece and the Federal Reserve. What are your thoughts?
So, Greece, we don't think that the probability is high that they're going to default, first of all. But then we also think if they do default, is it really the worst case scenario? Probably not. Basically, they'll suffer some initial pain with higher inflation, weakened currency, and whatnot. There'll be some uncertainty involved as well. But we think that they'll be able to avoid all the strict bailout rules that they're currently having to adhere to. And they could slowly put together their financial and economic system, and it could be good for Greece in the long term, and it could be good for the rest of Europe.
Okay, and what about the Federal Reserve? What do you think about the data coming up from the meeting this week?
It was really interesting because the comments that came out of the Fed meeting this last week were a lot more dovish than investors anticipated. So the Federal Reserve has indicated they're going to hike interest rates much more slowly than investors originally thought that they were. And so in addition, you've got countries across the globe that are basically undergoing easy monetary policy. So their interest rates are incredibly low. So investors are really going to be attracted to U.S. Treasuries because our yields are much higher than other regions, and that should put a lid or suppress interest rates. So I think it should mitigate the pain of rising rates here to come.
Okay, and something else we've been hearing a lot about are inflation expectations. Mm-hmm. What are your thoughts? Higher inflation on the horizon?
Well, that's also really interesting because May CPI was just released this last week as well. And the inflation report came in lower than expected. So basically, core and headline came in lower. And we still think, though, inflation is on the rise for a number of reasons. First of all, you have wage growth. So we think that we're approaching full employment, and usually that coincides with higher wage growth. Second, we've got housing supply. So housing supply is lower than demand right now. So basically, it's increasing rental inflation, and that's about 40% of core CPI. So we think that could be another cause. We've seen a recent increase also in oil prices. That's contributing to inflation expectations. And then, as I mentioned, regions across the globe are implementing easy monetary policy, which also increases inflation expectations. So for all those reasons, we think that inflation-linked products and then also commodities look attractive as inflation hedges right now.
Okay, and finally what I want to talk about is something that you've been writing about lately, which is loss aversion. Mm-hmm. Can you tell us what that is?
The best example that I can give people to describe loss aversion is, have you ever been to a movie and you paid for the movie and you're at the theater and you realize shortly into it that it's not going to be any good, but you stay. You stay because you paid the money. And so it's like, well, why didn't we just cut our losses? Why did we waste our time and our money when we realized that the movie wasn't going to be any good? We do the same thing with our investments. And so I go into it in a lot more detail in the PDF, and I would just encourage everyone to check that out. It could be detrimental to investment success if you're loss averse.
All right. Well, thanks for your insight today, Paula.
Thank you.
And that's it for this week. We'll see you again next Tuesday. Thank you for your time and trust in CLS Investments.